Contingency funds, creating a cushion to fall back on. Many of us fear an interruption in our income, even if we desire a break to raise a child or to pursue higher studies. If we have a cushion to fall back on, these decisions may become so much easier. The first step in financial planning is to create a fund for such contingencies. A contingency fund can be used when the regular income is at risk. The break in income caused by our sabbatical or retrenchment is not insurable. A contingency fund acts as an insurance against such shortage of income. Many of us ignore contingency funding. There are always more visible and important goals, and we save for those instead. An unexpected event is not planned for, and we are left unprepared. Contingency planning should come first, before all else. Illiquid assets like property, or investments with penalty for premature encashment cannot be used for contingencies. Equity stocks and funds are liquid, but may fluctuate too much in value. If the money is needed when the markets are down, we may realize a low value. Specific attention is therefore needed to create a contingency fund. It is easy to estimate the amount to be kept aside. One method is to simply provide for 6 months of income. Another method is to analyze the expenses of the household to identify critical expenses needed to run the household: rent, food, fees and utility bills, AMEs, insurance premiums, and such mandatory expenses should be added up, providing for at least 12 months of such expenses towards the contingency fund. The next step is to allocate assets to the contingency fund. A contingency fund should be readily accessible, safe and flexible. The ideal choice is liquid and short-term funds that earn a steady return with low volatility. These funds can be withdrawn whenever needed, and most funds pay the amount in 1 working day. Next, we start building a contingency fund. If we only save 20% of our income every month, for a contingency fund of 6 months of income, we will need 30 months to get there. To create a contingency fund faster, tighten expenses, invest lump sums such as bonus and incentive, and top up whenever possible. An increase in salary can be used to create a contingency fund faster, before being used to enhance lifestyle spending. Lastly, we need to define the situations which will warrant withdrawing money from the fund, and replenish it as soon as possible. When there is a contingency, the choice is to either use a loan against deposits, gold or mutual fund units, or to liquidate the investment. If there is risk to income, liquidation of asset is a better choice as there would be no cash flow to repay the loan. Loan can be used if there is income to repay the loan and if the rate of interest on the loan is lower than the rate of return on the asset. It is important to allocate money to deal with demands of life confidently. We may save ourselves from suffering a bad job. We may find the courage to quit and begin our business, or take that break to study. Our assets will stand in for us, if we have a contingency fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.